Okay, guys, welcome back to the channel. Matt with Green Bar Trading here. And as you can see from the thumbnail, today was a good day of scalping some futures. So, one thing you have to be very careful about, whether you're trading options or trading futures, it's these key economic data events. So at 9:45 here today, was the manufacturing PMI. It came in a lot weaker than expected. Now, what we've been seeing because of the Fed is when we get weak economic data, you will get a knee-jerk reaction to the upside because what the market is trying to say is if we keep getting weak data, that means that the Fed is working, the rates are working, and eventually they will pull on back or at least pause those rate hikes. So you get knee-jerk reaction, and then it'll come back down and eventually settle out where the direction for the day was going. But you have to be careful if you're in there at 9:45. Let's say you take a trade right before that, you forget about this, the trade goes the wrong way on you, you end up getting stopped out when you could have just waited until after these type of macro events that are moving because of algorithmic trading. Those computer algos trade on this. So they see this number come in, they're instantly buying, and then they're selling. So they're trading on it. So this is what we see here with the manufacturing PMI. All that is the purchasing managers index. But it is something that if you're below 50, it shows contraction in the industry, which means that demand is pulling on back. Everything the Fed wants. So that's that. Now going over to the day, to the trading. The SPY I have down here on the 5-minute. Up here, locked in on the 1-minute, I have the Russell 2K. This is what I'm trading. But I'm watching the SPY as well. Because you can see here, as this is making highs, so is the Russell. A lot of these markets work in tandem with each other. So I like to know, let's say, for example, right here, even though I wasn't trading here, you had rejections at VWAP on the SPY. Right here, you're like, oh, I wonder why the market's pulling on back. Because you're rejecting VWAP on the S&P 500. So you get 3 nice green candles, right, on the 5-minute. These are good to play for the long side. And then you get a breather, a pullback, right? So you get a breather, a pullback, and now you see that next kind of leg higher. So, you got to just have multiple things you're watching. Day trading is not so simple where you sit down, I'm going to press a couple of buttons, and I'm going to make, $495. It does not work like that. You have to be prepared. And even if you are prepared, you still will make mistakes. And if you don't follow your rules, I can't stress this enough, this 495 will just evaporate in a matter of minutes. So, really trade safe. But what I did here and what I could have done better, I'm going to look at this on a little bit bigger of a chart. Just make it easier on your eyes. So the market's chopping around, right? Like I said, at 9:45 in the morning, there you go. You get this report that comes out. And if you're in a short here, because you're making lower lows, you're in a short, all of a sudden, in a matter of 1 minute, you have that huge candle because of the PMI, the manufacturing index. So, you got to be really careful. So you get a knee-jerk reaction, it comes back down, then makes a higher high here. And at this point, you're thinking, okay, it did this, and now we're starting to break out, only to pull on back. So you get right up to those pre-market highs, and then you pull on back. Now, what I could have done better is right here, this key level here of 1730. It's a key level on my charts for a reason. It's a key level that I post every morning. So these key levels, these support and resistance, I do it on the SPY, the Qs, I do it on the ES, and I also do it on the Russell. And we post them every morning because it's nice to know where you might see that support. So going back here, just 5 days, you can see here, there's support here, right? I'll just circle these areas. Support here, you get a rip up, pulls on back, and that's nice support. Right over here, the day breaks down, comes to this nice key level, comes back up, and you see this resistance. It breaks out in the after hours, comes back down, all in the overnight session, and then when the market opens, it's opening right at this low, another spot here to have gotten long as these levels hold up. Now, they're not always going to hold up to the penny. It might break it a little bit, but these are really the reasons why I like this trade here. Looking at it on Friday, you get a nice push up to that level, and then it pulls on back, comes back up. You can see all this consolidation around this key level into the pre-market just about makes it to that key level. So now, obviously, doing the work, doing the studying here, this was a spot that I was very interested in to get long off of. So what I could have done better was, instead of trading before it comes down to this level, now I did take a trade off of this level, but all I had to do was wait, be patient, set alerts, and just wait for this to hold up, and then eventually start this breakout. And this could have been a really nice trade right here, and taking one trade instead of multiple trades. So if I was going to do something better today, it would have just been to wait until it comes down to that 1730. Sometimes you'll miss out on the trade, and it's tough when you have this sell-off here, right? And it's making lower lows. It's very tough to get in long here because you just saw all this weakness happen. So, and then coinciding with the S&P 500, you saw it here, and then eventually the 5-minute chart started to look really, really nice. Once that happened, that's when you start scalping and getting in the groove here to make that money. So I hope that this video helped you guys out. Hit the thumbs up for me if you don't mind. If you're new, consider subscribing, and I'll see you guys back on the next one. Take care, guys.